Who is Vocus? Vocus is a company that extends the global internet backbone to Australia and New Zealand from the US primarily to provide domestic and international internet services. So if you connect to your ISP has to be connected to the backbone of the internet somehow. And so, for instance, we would provide services to our iNet for connectivity to the States and all the, basically all the ISPs from there downwards, excluding Telstra, Optus, TPG, etc. We also provide carrier-grade wholesale data and voice services domestically. So there are a lot of VoIP provisions, like your ISP might have a broadband link to you. We might have a telephone service as well, which is typically delivered as voice over IP, and we would deliver that to them on a wholesale basis as well. On top of that, we have an extensive dark fiber network in Sydney, Melbourne, Brisbane, Adelaide, and Perth. What is dark fiber? I hear you ask. Basically, we lay fiber optic cables, which within it have typically about 300 strands of fiber optics, and we deliver to a company from their office to their data center where they have the outsourced IT equipment, a pair of fiber optic filaments, which allows them to pass through nearly infinite amount of data. In fact, one pair of fiber optic filaments can carry about a quarter of the whole of Australia's internet data. There are really only two players on the East Coast that deliver that, TPG, the Pipe Networks division of TPG, and ourselves. And on the West Coast, there's Amcom that's got a very strong position in this market. It's a very interesting business segment where the first customer pays for the actual capital cost of laying the cable in the ground, and the other 150 customers that you can service on a cable. Basically, there's no incremental cost, and all the profit flows down to the bottom line. We also have co-location services, which are basically data center services. We don't provide managed services. We provide the facilities for people to install their equipment in data centers, which is a bit of a niche play, in Sydney, Melbourne, Perth, Auckland, and Christchurch. Just to take you through the journey, back in 2010, we were predominantly a wholesale internet provider. We want to differentiate, have a differentiation in terms of revenue sources and earnings. We wanted to move into stronger infrastructure-based arenas with strong EBITDA growth, and that is basically data centers and dark fiber. Now, to be able to do that, we had to raise capital. Very hard for a small company to go to the bank and get that kind of money. So we decided to list on the ASX, and that's when in the lead up to that, that's when our relationship with Steve and Wholesale Investor began to basically tell our story. We listed on the ASX. We grew very strongly in that year to $17.5 million of revenue. The company was founded in 2008 and was basically cash flow positive in the first 8 months. So that $17.5 million was delivering about mid-40% EBITDA margins within 2 years. FY11, we entered the data center market, as I mentioned, and we doubled what we purchased. There was an acquisition where we initially acquired some capacity, but we doubled that ourselves. Again, we doubled the internet capacity, the amount of data delivered to our customers, and we raised capital to the tune of about $15 million. Grew our revenues to $31 million. It set us up for basically FY12. We entered the dark fiber market, as I mentioned earlier. We doubled the size of that network within that year. We tripled the number of customers on that network within that year. We entered the New Zealand data center market. We have, as our single largest customer, we provide all of the international connectivity for Vodafone New Zealand, which is quite a vote of confidence by them. We are now, because the ISP market and the telco market is a defined universe of about 600 companies, by moving into data centers and dark fiber, we're now selling those services to the corporate market. So the universe of our potential customers has exploded to, in the region of about 50,000 customers with over 100 seats. And that's how we're able to continue to grow our revenue. We expanded to Singapore. We now have the largest converged IP network after Optus and Telstra in Australia. We did another capital raising this year for a total of about $21 million, including the initial $15 million plus a share purchase plan. And I think our investors like the way we've been deploying our capital, and therefore they were very supportive, and it was oversubscribed. FY13 and beyond, what we intend to do is we intend to leverage our assets, our infrastructure assets, which are highly leverageable. Are interested in other strategic acquisitions, about which I obviously can't say too much. Grow into the corporate market and expand the Asian footprint. Initially, probably Hong Kong. So FY12 numbers, we grew our revenue by 46%. The underlying EBITDA growth was around 70%, which shows you how largely or highly leverageable business it really is. And this was driven by growth of diversified products and strategic acquisitions. We expanded our fiber network by a factor of 3 in the year. We won the Customer Service Award for ACOMS, which is the umbrella organisation of the Australian communications industry. Our direct corporate sales that we've just entered are now accounting for about 18% from a standing start from last year. We acquired MaxNet, which is a premium data center in Auckland, plus a telecommunications services provider in June 2012, like last financial year, and that's already going gangbusters. The amount of internet traffic that we support and sell increased by 80% year on year. The forecast for that is that it will grow for another 40% compound per annum for the next 4 or 5 years. These are independent stats from companies like Telegeography and Cisco. Just to give you a bit of historical perspective of our growth, you can see that all of the metrics, all the key metrics are mainly in line. It shows that there is it's a highly leverageable business and scalable. Yeah, we're very proud of our certainly our impact growth over time. The EPS growth is slightly smaller in terms of percentage because of the capital raising that was performed in that year. In terms of the product segments that we have, internet, everybody's consuming internet more of the time, all of the time, on their smartphones, in the bus, in the train. People are downloading Blu-ray movies. This is just exploding the amount of data that people are consuming, which a lot of it flows down to our back-end services. 80% traffic growth, as I said, and increased our revenue, which is 45% of our total revenue, to about 20 million. And it generates about 10 million in cash. Voice is a business we haven't really been focusing on, so that's been traveling sideways. 9% growth for Vocus is traveling sideways, by the way, in case you're wondering. Data centers, around 200% growth in revenue. That's got very healthy EBITDA margins, mid-40s EBITDA margins. So that's a really good bread and butter industry to be in. The great thing about data centers is that lots of communications and corporate customers have their equipment in those data centers. They need to connect to those data centers, to their equipment. And so we can sell them fiber optic communication links to those data centers and internet connectivity to complement their services. And we're still expanding our various data centers. Data centers, the other good thing about that segment is it's a very sticky business. Once somebody's deployed $80,000 worth of equipment in the racks in a data center, they're very unlikely to move it because the reason they're there in the first place is they want 24/7 operations. So it's very hard to shift. And so if there's some price erosion in the market, the cost benefits for shifting the gear for saving a couple of $100 a month, the business case never stacks up, so it's a very sticky business. Fiber and Ethernet is probably our most exciting segment. As I mentioned earlier, the first customer pays for the construction of the cable, and every subsequent customer, their services and the revenue basically flows predominantly down to the bottom line. So for instance, when we have fiber into Chifley Tower, once it's built in there, our sales force can go door knocking to all the customers, all the people that are occupying Chifley Tower, sell them a service. Service is typically something in the region between $3,000 and $2,000 per month. Contract duration 36 months, locked in. It's pure bottom line profit. So it's a very, very exciting business model to be in. And it's a duopoly on the West Coast, and it's a duopoly with different players on the East Coast, and we operate in both. And the great thing about it is we've built about 235 kilometers of fiber network, which basically goes within 300 meters of any CBD business building in Brisbane, Melbourne, and Sydney. But the network is below 5% of utilization, so you can see what the upside potential of that is. It's quite substantial. And so we expect to see the mix of revenues increase towards fiber and data centers and away from internet. Voice, we haven't been focusing on. In the NBN world, voice is going to be a mandatory service to be provided together with your broadband connection. So we have to be more aggressive in that segment. There's easy money to be made, but the margins are substantially lower. So that's really the Vocus story. Steve asked me to keep it brief, so that's what I've done. And so I thank you all for your attention, and hope you enjoyed the ride.